All right. Good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for August 31st, 2021. So we're starting with a yellow kind of a day today. We had a nice run yesterday, no gap, an inside day, and it closed slightly weakly. So the fact that it couldn't push to a new high makes it a yellow day for me, an indecision day. It didn't make a new low. It didn't violate yesterday's low. So it's a perfectly sideways kind of day. I still like the a stop right here at the 2-bar low, right around 450 and a half, I'd say, or even 451. I want to protect. Tomorrow's PSAR is going to be right about 444. The spine of the dragon is rising. The slope of the RL30 is up strong. That's very good. The 2.5% sell-off is way over here at 442. The 5% is at 430. And that's way down here by the Z3. So there's Z-2, the southern skin of the river, Z-1, Bollinger Band mean down here by the PSAR. So I want to protect all of these gains above the Bollinger Band mean. That I take that to be my money. And really, that's the from the recovery right here, the 1, 2, 3 entry. Now what I'm doing is I'm preserving all of the price action that was north of that, right? And I look at this as leg 1 back here. I look at this as leg 2. And I'm looking at this as leg 3. Now, this is a natural place for it to roll over and start to fail, unless this is going to be one giant leg 1 on the weekly, in which case, that move from 434 to 454, which is plus $20. If that's just one giant leg 1, then the next upside is 475 is the next upward target over the next 30 days. So if it continues to grind like this, 475 is in range a month from now. So everything looks solid here. All right, let's clear drawings. Let's take a look at the sectors. Okay, so today we had the S&P was down a fraction, minus 0.15. The Qs were down only 0.08. The diamonds were flat at minus 0.05. The Russell was up a fraction at 0.2. The treasuries were off 2/3 at 68. And the best performer of the day for our big indexes was EEM at 1.37. All right, so let's take a look at the sectors that worked. First, here's the first cluster is marijuana, staples, discretionary, the FANGs, and clean energy from 0.2 to 0.4. We had then the next cluster of oil exploration, commercial real estate, ARC Genomics, Ethereum Trust, and S&P Biotech from 0.77 to 0.9. I would note that Tesla held its gains from yesterday up another 0.66 at 735. That's good. Finally, the strongest sectors, moonshots 1.4, Wheaton Precious Metals 1.6, and Mexico 1.61. The best performers in terms of the targets, Virgin Galactic up 9%. The large cap blended crypto 4.5%. Robinhood 1.56. Alcoa 0.7, Tesla 0.66. Then PayPal sneaks in basically flat. So the underperformers, it was a mixed bag today, the underperformers. Well, first of all, cut and finance were both co-equal with the S&P. The other lumber minus 0.23, materials, VIX, blended commodities, and tech down to 0.53. Blockchain, innovation, and energy off 0.68. Oil off 0.75 to 0.74. Then Brazil off 0.84, and agriculture 1.34. So the big losers were not the sectors at all, which were all kind of tightly clustered around zero. But the big losers were the Bitcoin Trust 3%, Cliff Natural Resources, the steel company, TX Steel, and US Steel 1.15, 1.5, and 2.25. Squarespace and Coinbase off 1.5. Apple, John Deere, Devon Energy 0.75. So it was mostly individual stocks and targets losing today. The sectors were actually not that bad today compared to the average gains to the upside. But this still feels kind of like a grind. With this market feels like a grind right here at the end of that third leg and possibly rolling over. And now it's a competition to see what's going to win the news cycle right now. The for all of the disaster, that the Afghanistan exit represented, they got almost everybody out and no additional catastrophes other than the exit and the way it was handled itself. So the all that's left is saying, well, I wouldn't have done it that way, but without additional loss of life, there's now going to be a shift. What are they going to talk about? Impeachment when the Democrats lose the House? That's a long ways away. That's well over a year before that could happen. The infrastructure bill, I think, takes center stage next, and there will be a steady drumbeat of the wailing and gnashing of teeth of the changing world order and the decline of American power. But that's been underway for a while. So, yeah, let's. I'm interested to see what grabs the news cycle next, and that sets conditions for kind of a quiet, grinding bull to continue. So we'll see how the market prices in that uncertainty. There was only one chart to look at today, so we will look at it. I'm just be advised, this is an opportunity for you guys to get some free chicken if you're willing to put the effort in to make the charts. Also, I will commend to your attention I uploaded the Generation 2 RLCO framework from 3 or 4 years ago. I went back through the notes. It holds up really well. Lots of good basic core examples that are covered in the hybrid course, which you see us discussing quite a bit. So that's a pretty good reference document hanging in Patreon. And every time we get to the end of the month, I'm always thankful for the support you guys give. Keeps me sharp and helps me achieve my service value, doing my duty to others. So I really genuinely appreciate the support. All right, so here is one let's see this. Who posted this one? This is Derek. And this is his first effort at trade framing. He's looking at a 1-2-3 entry here. After it came down and touched Z3, after this range compression, and then an expansion to the downside that hit Z3 and then reversed with a doji. He gets a 1-2-3 entry here, and is holding a gain so far. Is in the money. It's targeting, 1.5 to 1 to the Bollinger Band mean, 2 to 1 to the far side of the river. This is in AT&T. There is a strong resistance right in here, but this looks to me to be a reasonable effort. It would be surprising for it to get much past the Bollinger Band mean, if I'm being honest, because there's a lot of resistance inside here. But if it should get above beyond the river, that's good. But if it gets to the Bollinger Band mean and starts to stall, that would be one that I collapse. For Derek, when you're listening in, what I'd like you to do is take a look at the trade framing questions. Look in the chat room for the trade frame flashcard, and there's a set of specific questions to ask yourself and to answer in order to fully frame the trade. And I would get in the habit of answering those explicitly in writing to yourself, so that you have a complete, a thorough and complete trade frame ready to go in both directions. Like, for example, if this violates the RL10 to the downside, is that where you would you go short there? I personally would, because we've already seen one leg down. If it rejects right here, I would want to be short at the belly of the RL10, for example. But that's an example of the kind of questions for you to answer in developing your trade frame. I would like for you to see, to show what your reasonable target is. You're showing the Bollinger Band mean, and that feels reasonable. The 10-day high would put you at the far side of the river, which I think is also legitimate. Getting back to fair value would be a real effort, but you can see how it would have to fight. There's 3 legs down. Here's leg 1, leg 2, and now leg 3, which sort of makes this one coming back to the far side of the river to be a reasonable trade. But I wouldn't expect this thing to be explosive. AT&T just doesn't trade that way. But the trade frame itself feels sound to me. We'll see how that works. You would think that if it was going to fail after this great big bar down to Z3, it's had 3 days in a row to fail, and it hasn't, which has caused this to hook and reverse. And you're going to see a P1 probably tomorrow when the RL10 crosses the RL30, and that'll be a second day of momentum. And yeah, I would take a look at this on an hourly chart too, and see how orderly that is, and see if that is a manageable time frame for you. Especially if we're just going to look at this as a short-term tactical trade, I think maybe I'd be managing this on the hours or even the 30-minute as a way to build proficiency at the faster time frames. But otherwise, looking good. All right. I'm going to hit the reports first. Then I'm going to, after the reports, I'm going to do a quick case study on a super pinch case study. So you have that to look forward to. Okay, let's go to dashboard number 1. All right. Yeah, let me know in chat. Can you guys see the dashboard 1 now? Just checking on lag. Yeah. Okay. There we go. Okay. All right. So we've got bullish normal conditions, overbought in every dimension except the short term. We've got the risk index is starting to slowly improve. Notice how this has now rolled to the upside. This actually makes me feel pretty favorable about the possibility of that upside swing. I'm cautiously optimistic now that, no more boots on the ground in Afghanistan officially. And that's starting to set up a nice almost a cot of two on the volatility if you see those rising lows. And we're very close to the zero line here. This could be nice. We'd like to see that get all the way up to the Z1. If it can get up into there, that's like about a 4% move, which would take this up near 470. If it could get that kind of a move on the declining volatility, then this could get to 470. Emerging markets are flashing a short signal in the channeling and overreaction. So, as Pete, I think, pointed out, this was a gap up and is failing right now. So if that continues to fail, that becomes a nice dead cat bounce. And if we see weakness tomorrow in the markets and in SPY and then greater weakness in EEM, that becomes a natural short, high priority short. The min pains, DIA, IBM, and McDonald's. Nucor in the steel companies remains a 10-day max pain, along with I'm interested in Brazil. And the energy sector is still suffering. Four dojis today, no breakouts in the NDXs in the Dow 30, I should say. Four good auto framers. A handful of triple screens, Pfizer and Walmart. So especially Pfizer looks interesting to me. It has an RSI2 of 9. It's 3.6 to 1. It was a triple screen, and it's channeling an overreaction. So that's the kind of coiled spring that could be really favorable. Next up is the ETF 30, only 4 dojis. And we're so close to that 10-day high that there's no auto framers whatsoever. So this is basically a whole lot of nothing. I would be taking a look, I think, at oil exploration in Mexico as opportunities. Mexico had a really strong day. It was the number one mover out there at 1.6. In the auto framer up next, only 6 auto framers. And you can see the automatic framing data, the mechanical trades there, which includes all the farms. You got Pfizer, Johnson and Johnson, Merck. I like for Derek that AT&T is still 2 to 1 on the reward to risk. So that's actually you tripped into a good one. I'm wondering how you saw that one. Was it from the framing data from yesterday, or the 1, 2, 3 got your attention? I'd be interested in knowing how you came across that one. But it still looks favorable among all the members of the Dow and the ETF 30 based on trade location. Only 3 daily squeezes, but what's interesting is that 2 out of the 3 are big fat indexes. There's the S&P that's poised and ready to break in either direction, and emerging markets at a 2 to 1 mechanical reward to risk. Yeah. Derek says a 1, 2, 3 on a visual scan of favorites. So that's good technique. 1, 2, 3 gets you early into the move. So I like it for that reason. Even if I don't take the trade, at least I'm starting to stalk it early. DIA and MDY are in pretty good shape at 1.8 to 1, and the Russell at 1.8 to 1. So the U.S. indices are poised for success here, like a coiled spring, and it can go sharply in either direction. But the upside is compelling. We're just going to go right to the NDX. Walgreens had big strength today. Verizon and Walmart, Coca-Cola, and IBM. We talked about IBM as a laggard in the tech, so maybe there's some more juice available there. And then the internationals and real estate had the big moves today. So some local strength here on the globals, but Mexico is really the one of interest to me. Like Mexico was a 160 on the short-term NDX, whereas his running buddy Brazil is only a 35. So there's this like a split of a pair trade there: Mexico long, Brazil short. All right. I want to take a look at a trading case study real quick if we can. All right, so I want to, quiz number one here would be, what is the pattern that you see? The price is right in the Bollinger Band mean right here at the thick blue line in the middle of that yellow box. Yeah, Ken H is correct. The super pinch. I knew he would see that one. Yeah, so in the super pinch, first we're going to find, first we've got the Z3 pinch has occurred. So we have a very tight squeeze here. And we've got a long sideways move. Well, when you get a long enough sideways move, you notice you start seeing all of the RL 270 has now come in and squeezed inside the Z3 lines. The green line is the RL 90. He's right in the middle of this mess. And the RL 10 and the RL 30 are in this mess. And price in the dragon, you can barely see the price because of all this stuff tightly compressed. So when we frame this one, a standard practice is we might do this. Let's see if I can get a. I might, if I wanted to play the breakout at the Z2 line, that would be blue dot number one. Then that will have cleared the hump of the dragon and the hump of the RL10. If I'm looking to get short, maybe I would be short at the PSAR flip, which is also a collapsing dragon on the RL10. 5 would be a Z3 pinch, would be a breakout from the Z3 line, and also is crossing the VWAP. 6 would be, if I'm looking back at the I'm looking back at the Z3 excursion for that, like a more of a delayed breakout, in the same way that 3 would be a breakout from the previous Z3 excursion. 2 would be a breakout from the current Z3. So 2 and 5 are the Z3 breakouts. 1 and 4 is like a Z2 breakout and a PSAR flip. And so price is right square in the middle of this. And so if we were to set up that trade frame, then we would say which I'll ask since Ken H is proficient in this technique. I'm going to ask all of you to decide where you want to, where would you want to get long? Where would you want to get long? And where would you want to get, where would you want to get long? Where would you want to get short on this one? Long at 1, 2, or 3, short at 4, 5, or 6. And we're only going to play one position. Ken H, what do you think? Hey, go ahead. If you got your mic on, Ken, go ahead and if you don't mind, you could. It's maybe easier to talk than type with your Bruce Lee kung fu grip on there. Just put my headphones on. So Mark, let's see. We're doing just a quick poll here. So keep track of this on your own on a worksheet, right there at your desk. Mark S would get long at 1, short at 4. Moose would get long at 2, short at 5. Derek H also 2 and 5, waiting for it to get out of the noise. I would tend to go along with 2 and 5 myself. Like on the short side, I don't see any reason to wait for 6. Right? Like I don't want to wait. Once it crosses the VWAP for me, I'm good. I don't need to wait for 6. I would rather capture this distance in here between 5 and 6. And if I was going for symmetry, I would stay with 2. So I could live with 2 and 5 to clearly get out of the noise. So by acclamation, more people wanted to go that way. So we might just. So what I'm going to use as my stop would be the breakout, or would be the blue on the breakout at 2 or 5. I would start with my initial risk box as the blue line. All right, so that would be my stop. Now, another thing that we've done in the past is this is an advanced technique, and so I don't recommend it until you have 1,000 trades like this under your belt. But we've done this thing we've called buying on the button. So if I had a belief that this thing was it was going to go long, I could just decide to buy it here and then have my stop down at the at 5. So I just might make this a stop and reverse. And the idea being is that that way, by the time it gets to 2, when I want to own it, I've got 1R in hand. Instead of waiting for a 1R move and then get in, I could just buy it now. And the argument might be it found support here above the VWAP and above the Z3, and it had one SSC already, and it's made the second move up and has pulled back. And so now, if this is going to work, this should really go. But if it fails, I'm willing to get short at 5. And so we call this one, if we just buy it right there in the absolute middle of the noise and take a directional position, then we just call that buying on the button. And it's about a coin flip. But so I'm not going to do that this time. I'm going to wait for 2. Now, if you'd gotten long at 1, then you would be long right now. Everybody that voted for 1 would be long in here, and you'd have a stop. Your stop would be here. And then what we'd be looking for is how quickly could I get my stop to no lose plus dinner for 2, which would be like right about here. The sooner I can get my stop to there, the better I like it. So I'm not ready to do that yet, but we would be watching for that. Now, I'm not ready to do that yet because I haven't entered yet, because I'm going to enter it too. All right. So if you were the person that entered it too, you got this piece. Now on with a 3-bar follow through that's already up here at Z3, I now have some choices. I could decide just to do this right now and take my risk out, and then just leave that and let it breathe for a while. And at the same time, I might pick a PSAR extension. And I might just take that as my trailing stop. And then as soon as it comes up, as soon as that comes up to here, excuse me. As soon as that sliding stop comes up and hits my no lose stop, then I would pick up the PSAR dot. But meanwhile, I have ratcheted this stop up to lock in no lose plus dinner for 2. So in a matter of about 2 to 3 minutes, I've eliminated my risk from this trade. So now it's kind of a science project. Now my next decision is, do I want a second position at 3 or not? How far up the stack do I want to go before I get a second position? And so I'm going to count this as my as a little green box. The green box for me is like 1R. So that level 3 entry there, that would be a little bit more than 1R in hand. So what I've actually done is I've actually locked in this piece of the move right here. And the piece of the move that's open, so it's money in hand, but I haven't locked it in so far as this, is the blue box. So blue is open gain. That's the market is still playing with, and it could give back that much. But the green box down here is my money. So lock in your decisions about where you might want to put your second position in if you were going to do that. Like one thing I could do is I could just stack 2R up here and say that what I want is I could just decide right now that if it got this high, I'm just gonna add a second position, and we'll call that 7. So I'm going to add a second position if it gets to 7, because that's going to be 2R in hand. And there we go. And Peter agrees with me. So I'm going to leave 3 on just so you can see it. Now, if you had decided to put a second position on at 3, you'd have been long from here. And now you have a decision to make. Do I want to ratchet this up so that the second position, the second position is no lose? Or how much wiggle room do I want to give it? So that's one of the issues that you have when you get a second position on before you get to 2R in hand. So that's why I try to coach you guys to wait for 2R in hand. So now what I have is at this point, I have this much open gain in the blue box. I've locked in this green box. And I've already given back the yellow box. You know, that's the retracement from the highest high. Moose asks, well, what time frame is this on? It doesn't matter. This could be a 1-minute chart. This could be a swing trade. The super pinch is an implication of you could get 10, whatever the width of the Z box is, and I'm going to draw this as a blue. Whatever the width of that blue box is, when you get a super pinch, there's enough compression in there that you could get 10 times the width of the Z3 line. And 5 would be absolutely not unusual, but you could get 10. So you've got an implied upside move because of range compression is so exaggerated. That's what 2 of those looks like. So there's another, from here, there's another 3 of these, actually, because of the breakout, there's another 4 of these boxes available to the upside. So if I'm shrinking this down, there's enough for 2. A move to the upside that's this high would not be unusual. So in terms of previous support and resistance, yeah, that's true. But what I want to show you is that when you have a super pinch, there's an implied range expansion that's available to you. And so you can actually manage this thing by the way we're doing it right now, which is to be dialed in and managing the micro moves. So first come, first serve. I'm still going to get a second position at 7. I'm going to get a second position at 7. We're getting close to that. And I'm trying to decide where to put my stop. I think I would actually consider jumping my stop up to here. Now, I'm not taking this entry at 3. So when I have this kind of a formation, oops, there we go. Yeah, so I'm not taking this move yet. I'm waiting for I'm waiting for 7 to get my position in. So I just feel like I'll just lock in this move right here. And so when I do that, now my stop path looks like this. I noticed that my little PSAR angle is off now. It's getting steeper because of the gains, the nice sharp gains. So I'm going to steepen. I'm going to steepen that. Now I could also go with the Z line excursion like that, and I like that one even better. So I'm going to take the edge of the river. So now this thing is either going to fish or cut bait, right? This thing's either going to work right now or not, and it works. So now I'm going to take my second position here. Now I'm going to jump my stop to here. And I'm going to continue with my my little Z1 excursion, the edge of the river. So now what I've done is I've locked in. I'm going to get all these things locked now. I've now locked in this green box. And as soon as I can, I'm going to jump this. I'm going to jump this one up as soon as I can, so that I can get my second position locked in. And there's my stop. So this one didn't last very long. That second position scratched. So essentially I get about a 2R move out of that one. And now what I'm noticing is the penetration came down all the way to the what would typically be a sniper exit down here. It came all the way down to the PSAR, and it's still only halfway down to the Bollinger Band main. Now, what I want you to notice is that from our entry over here at 2, the Bollinger Band main has just now caught up to our entry. You know, it had this move. The Bollinger Band main has improved, but it's just even with our entry. So that's where the managerial exit would be. But we have already locked in and cashed a 2R win because of our more aggressive stop management. And what we did was took advantage of a move that started walking up along the Z3, pulled back, and now was trailing the Z2, and now started to roll over. That looks like a 1, 2, 3 exit. And I'm happy with that 2R. Now, what I'm looking at is deciding what to do with this posture. It's gone summer to fall, but the RL10 is starting to peak. I almost want to do this. That's my stop. I'm almost ready to do an entry, like if it breaks out above the top of the dragon, like right there. Or I could re-enter at 7 where I entered before and it failed. Or I could wait for the top of the RL10, which is up here. and we'll call that one 8. Okay, I'm looking in chat. What do we got? So Peter is playing along, waiting for the Kata 2 or the collapsing dragon. So Peter is ready to go at let's see, I would say probably I'm gonna adjust and call that 7, 8, and 9 so that we have that ascending order. So Peter, what would you where would you enter on the long side here? So I want you to notice that we now have a new, we are reframing this, and price is right here. Where would you enter on the long side? 7. So you would enter long at 7. And where would you want to get short? Like below the PSAR dot or the 2-bar low? Well, the price is already crossed, but if it were to fall this far, right here, you would probably see the RLXD. So a way to decide what price would get you in would be to draw that. Would you get short at that red line? If we get one more bar low and takes out makes a new bar low, then that would probably pull the RL10 down. Yeah. So we're going to call that one. We're going to say he's going to get short at 10. And then I'm going to get long at 7, short at 10 also. And I'm going to use that whole yellow box as my risk box. Okay. So now, Peter, we are long again. And our stop is the red line. So we'd have had a call to make here at the RLXD or at the Bollinger Band mean. Either one of those would be acceptable, manageable risks, and so on. Okay, so now the next task would be, I'm going to give you the exit at 10, and now you can tell me, is that stop and short? Are you short at 10, or did you just cash it at 10? Short at the red line, and then your target would be, you're looking for the, let's see, target would be probably down here at the RL270 or the Z-1, because we're already at the at Z0. So if we're short at 10, then our stop is probably also that yellow box. Let me get rid of this one. Like, I'm ready to get long at that one again too. So I'm short at 10, and I'll stop and reverse at 7. And my target is the Z-1 and the RL270. This is one where I probably just scratch right here. And I'm willing to get long at the, let's see. I'm really tempted to get long right there with the bottom of the RL10. But I think what I'm going to do is I'm going to wait for it to cross the Bollinger Band mean and the Dragon. So I would get long here. And then I would get short on the collapsing Dragon. Okay. So this this trade that was short from 10, it had 2 or 3, 4 minutes or 4 bars to fail further, and it didn't. And now it's hovering back in the river, and this feels like it was not going to fail. But I'm ready to get short again at the red line. So I'm long here. Now, this is interesting here. If I'd have gone slower, I could have challenged you with 9 is still an interesting moment. 9 is a emerging dragon. And what we've got, though, is we've got these gains. I've got that gain in hand right now. So what I'm going to do is lock in the PSAR. And I'm going to raise my stop from here. Oops. My stop was here. And I'm just going to follow it up with the PSAR. And I'm just going to be on the PSAR right now. Okay. I mean, I could be tempted with a second position here. Like if it took out that, like the Z2, that would be like 2R in hand. Because I'm about at 2R right now. Or we're about at 1R right now. Yeah. So that line there, we're going to call that one 11. At 11, I could consider taking a second position. Okay. Instead, we end up taking a 1R gain and so on. So that's kind of a grinding move out of the super pinch. And we've got about 3R in hand. And I still like the long at 11 as like an emerging dragon. And I think my stop or my short position would be, I think I like this one as my short, but that would be the collapsing dragon right there. So now if I was going to draw this yellow box, oops. I would look something like this. as my next trade frame box. And then I'm going to play the breakout from either one of those. And my stop would be, I would play the middle of that box, which is like the Bollinger Band mean. So whichever way it breaks out of that box, I will take it in that direction. And I'm going to use half the box as my risk. So I'm really looking at something like this. Okay. Check or hold. We good on that? Oh, big surprise, big deal. So from 11, we suddenly get a runaway move. That's going to give you, now remember the R box on this is half. So that's holding like 1, 2, 3, 4, 5, 6, 7. So that's 7R to the upside. And if you recall, that pink line, that purple line was our estimate of some kind of, was 5 times the width of the super pinch box as a not unreasonable upside move. In this case, we just kind of got lucky in the grind, and we're in the position with an emerging dragon, and off we went, and we got lucky. And then by this time, it's because this is a day trade. This would have been one of those where a 1, 2, 3 exit would have been entirely appropriate, because it was running like a scalded ape up the Z3 ladder and then topped out, and now has started to roll over at a natural resting point. And then the other thing that you notice is that this was a relatively low volume move, which you can tell because the VWAP only moved a fraction. I mean, it's up and it's moving. That's good. But this move really left the VWAP far behind, and it left the RL 270 way behind, and it left the Bollinger Band mean way behind. So you don't want to let this thing come all the way back to the Bollinger Band mean. And that's why this feels like a reasonable sniper target, right? A sniper exit. And cashing 7 plus the 2 that we made earlier this makes this somewhere around a 9 or a 10R win. And then as it goes into the close, guys are unwinding their positions and making some bank. So that's the power of the super pinch. That's why I love that pattern. It's like a little acorn that explodes into a mighty oak tree. The super pinch is your friend. And just remember that the upside implication is 5 times the width of the Z3 to the Z3. And if you look carefully over here in the middle, there was actually probably, there was at least a sideways quiet channel happening inside here. And then this breakout move or this breakout move, either one of those is legit. Okay. So that was today's trade case study on the super pinch. And we'll get that published. We'll get this whole thing published and posted tonight here shortly. Okay. So thanks a lot, guys. That's everything I got for you tonight. And we'll be ready for tomorrow.